Hey, good afternoon, everyone. I guess it's a long day, so hopefully your energy is still at a high level to finish the whole conference. We have a wonderful lineup of speakers, so I myself learned a lot in this wonderful event. So today, I'm very happy to have the chance to share with you what we have done at the Hong Kong Polytechnic University recently in collaboration with ASTRI and HKMA on central bank digital currency. And of course, as a professor at the Department of Computing, we will focus more on the technical perspective. All right, so this is the outline of my talk. I will first briefly introduce central bank digital currency, or CBDC for short, and discuss the privacy requirement of CBDC. Then we will go through some of the technologies that people typically use to protect privacy, and followed by a case study, which is some of the prototypes developed by HKMA in the recent year on CBDC in Hong Kong, and finally concluding remarks. So central bank digital currency, what's the definition? In one short sentence, it's simply the digital version of fiat currency issued by the central bank. For those who are visitors to Hong Kong, do we have a central bank in Hong Kong? Actually, no, but we have the Hong Kong Monetary Authority, which kind of functions as the central bank in Hong Kong. And around the world, there are a few countries already launched a digital version of fiat currency. Many of the countries have do some kind of pilot or POC or research, and 19 out of the group 20 countries are now in the advanced stage of CBDC development. So this is one of the hot topics in recent years. So why are these central banks interested in exploring CBDC? Well, there are a few potential advantages. Firstly, it can reduce transaction cost. Well, if you are a merchant, you know how high it can be to handle, let's say, cash payment. And it also enhances financial inclusion. In some countries, there are like island countries, then you can't afford to have a bank branch at every location in some remote area. So many of these citizens may not be able to enjoy some of the banking services. So with CBDC, they can serve more people, even those living in the remote area, and improve monetary policy implementation. At the most extreme example, in the most extreme case, we may even use CBDC to impose a negative interest policy to kind of force people to spend. Of course, this is just a radical example. And facilitate FinTech innovations. For citizens in Hong Kong, every now and then, the government may give money to the citizen to encourage them to spend. So those money are not given in cash, but in a consumption voucher, so you can only use those vouchers to make eligible purchase. But the admin cost is pretty high. I think last time we tried to disperse the consumption voucher to our Octopus card, and because the Octopus card has a limit, then it becomes a tedious process. You first receive $3,000 onto your Octopus card, then you spend all $3,000, and after that you get another $3,000, and then you prove that you've spent another $3,000, then you can get the later $2,000. So it is kind of time-consuming, high cost, high admin cost. But if we have CBDC, maybe it is possible to simply send this digital version of the fiat currency to everybody's digital wallet, and because of the use of smart contract, we can also program some condition under which this money can be used. So this will facilitate people's use of this consumption voucher. So in other words, CBDC may also facilitate FinTech innovations. So there are a number of advantages in CBDCs, and therefore many banks are exploring it. So this is just a quick overview of what are the participants in CBDC and what are the types of CBDCs. There are two types. One is the wholesale, which is used by the financial institutions to make settlement. But today's focus will be more on the retail CBDC, the CBDC used by ordinary citizens. And technology-wise, they are similar, but they can further be divided into three types. One is the direct retail CBDC, which is administered directly by the central bank, and it is a direct claim over the central bank. And the indirect model is that maybe the bank have some assets or deposit at the central bank, maybe at the wholesale layer, and then they can issue their own token, so that the token are actually claims over the commercial bank rather than on the central bank directly. And final model is the hybrid model, where the daily operation is conducted by the commercial bank, but those tokens are still a direct claim over the central bank. And for main topic of today is privacy. Well, what do we mean by privacy? Privacy is the individual's right to keep their personal information out of the public view, or control over the extent, timing, and circumstances of sharing personal information with the others. And it is a major concern of a major challenge for CBDC. Many people think, oh, the central bank is issuing CBDC because they would like to track our spending habit. But in fact, at least from our interaction with HKMA, it's not their goal to use CBDC to track people's habit. They don't even want to know our daily spending habit. And privacy by design is a commonly agreed principle, so we should adhere to this principle. So let's dig a bit deeper. What do we mean by privacy? Well, there are several types of privacy. Any CBDC would consist of holding and transactions. Holdings is just like an account. It has a balance, and it has an owner. Transaction involve a payer, a payee, and the transaction amount, and maybe some auxiliary information such as transaction time. Now, for privacy, it can refer to holding privacy, transaction privacy, or identity privacy. The last one means that, okay, given something like an account number, is it possible for people to get your legal ID? So in the following few slides, we will discuss the challenge in achieving all these privacies. Now, this is just a summary table of who is involved in the system and what should they know. For the central bank, actually, which is the system operator, knowing all these information is optional. In the daily operation, they do not really want to know the amount of this transaction, or who is the player, who is the payee, what's the legal ID of this payer-payee, or their balance. Well, only in case of some dispute or some problem arise or under court order, the central bank will inquire the commercial bank on, okay, what is this transaction about? So basically, in a sense, the system operator do not really need to know these information in the daily operation. Then for the validator, which validate the transaction, they optionally need to know payer, payee, but they don't need to know the real identity of the payer, payee. They kind of, you may think, okay, they need to know the transaction amount because they need to make sure no new money is created from the transaction. But later we will see how the cryptography can help ensuring this property without letting the system validator know these information. And for the others, we would like to hide as much information as available. Now, okay, let's look at the actual requirement from the user. If you ask the user, is privacy important to you? You may say yes. But if you ask the user how much you are willing to pay for your privacy, the answer depends. Somehow, some people prefer privacy over other things, but very often they prefer, their preference is, okay, efficiency or convenience. If they have to sacrifice the system efficiency or convenience for privacy, they may not do it. And in fact, there are different ways to measure the cost of your privacy. So there are experiments like if people give you a discount of like $5, are you willing to leave your email address? Then most of the time some of the people will say okay, some may say no. Then that goes to the next question. It also depends on what you are doing with the transaction. If I am buying coffee and you tell me, okay, if you leave your email address, I give you a $5 discount, then maybe I say okay. After all, I have many email addresses and buying coffee is not something shameful. But maybe I'm buying some medicine, then you ask me to leave my email address and I give you a discount, then maybe I will think twice and may not do this. And further, finally, it also depends on who is collecting the information. Maybe I am a customer of a certain bank that I'm okay for the bank to know my financial situation. After all, I'm using this bank account for my salary, so he knows how much I'm worth anyway, so I don't mind him or her collecting my information. But I may not want some of the small merchants to know my details. So it depends on a lot of context, whether my privacy is important. And from the regulator's point of view, it's not about privacy, but rather, is it still possible for them to prevent or detect criminal activities efficiently? And also, they need to be able to do audit and also trace those transactions. And for many existing systems, tiered level of privacy are usually needed. Let's say even without CBDC, if you transfer an amount which is small, then usually the bank won't ask you for any extra information. But if you are going to transfer a large amount overseas, then the bank will ask you for confirmation or extra information. So this is tier level of privacy. And for the commercial bank, it is their responsibility to maintain the ability to do KYC, AML. So what kind of technology can help them, facilitate them to do this thing would be important. Now, there are a bunch of different PETs or privacy enhancing technologies in the world. We can group them according to their principle. Some of them simply alter the data, like a pseudonym. You use a different name to represent the entity, or it can be stealing the data, like to encrypt the data so that no people except the authorized entity can access to it. And finally, it can also be something related to system or architecture, something like transaction mixing. So I mix a bunch of transactions, then you may not be able to trace the origin. Or in machine learning, we can do federated learning to help prevent the data owner from releasing the data to others. So all PETs can be classified based on their underlying principles. Now, for our use case, which is CBDC, what are the metrics that we need when we want to see what kind of PET is the most suitable? It can depend on generality. Can it be used to protect multiple privacy properties? We discussed holding privacy, transaction privacy, and ID privacy. So can the PET be used to protect all? And also, is it mature? Has it been tested and used it for a long time? Scalability, is it really efficient? And simplicity, is it easy to implement and integrate into the existing system? This is a table that we try to summarize existing PETs and based on those four metrics. And you may see, okay, pseudonym, very mature, very scalable, very simple, but may not be general. It can be used to provide ID privacy, but not the others. Something like zero knowledge proof, which is the next section, CK can provide kind of all these privacy generality, but in some sense, it's not that mature, at least compared to pseudonym, which has been used for a long time. It's still very expensive and also not very simple. We need experts to be able to design and implement CKP correctly. That's why a number of speakers mentioned, okay, besides CK, we may need some other extra measures because there are many ways that errors can be made. Now, for today, the rest of the time, we talked about we focus on two privacy enhancing technologies that we think is suitable for the CBDC prototype in Hong Kong, which the first one is pseudonym. Pseudonym is, of course, very simple. So we replace a data element with an ID, which is non-sensitive. It has been adopted in many scenarios already, like in the cryptocurrency world, in Bitcoin or Monero, they support staff address. Still, there are some minor difference. In Bitcoin, you have a Bitcoin wallet. From one wallet, you can generate multiple addresses. So as the wallet owner, that means the receiver that generate these addresses. In Monero, you have a long-term public key or long-term address, and based on the long-term address, I generate a random number, and then re-randomize your address and encrypt that random number using your long-term public key and treat this as your new public key. So in this case, it's the sender that has the capability to generate a new address for the receiver. But either way, it has been used. And of course, in the classical payment industry, payment tokenization in credit card has been used for a long time. Simply replace your ID card number with some string of the same format. And Project Scylla, which is another project done by HKMA, tried to explore the use of pseudonym to protect privacy. I think the strength has been discussed. Some weakness is that it does not provide full transaction privacy. In particular, because I use a pseudonym to represent my account or ID, so if I use the same pseudonym, people can still link this transaction to the same guy. Although they don't know the legal ID behind the pseudonym, but it is not that difficult to de-anonymize the pseudonym. Maybe when I use this pseudonym to buy something, buy a pizza, ask the pizza to deliver to my home address, then people know, okay, this pseudonym belongs to the owner that lives in this particular address. And also, if the pseudonym is irreversible, it may contradict the AML CFT requirements. Now, for CKP, I think this is a very, very powerful technique. It allows people to prove anything without revealing them. So you can prove, for example, your account balance is sufficient without revealing your account balance. And it's adopted in multiple scenarios, in particular in the Web3 world. So I'm not going into details about how it works, but it is very powerful. It can be used. So we also suggest to HKMA, okay, we should try using CKP. There are some weaknesses, like it's very complex, it's not that mature. And the next one is when we really try to implement it, the efficiency loss is pretty high, so we will discuss that next. I'm going to skip this slide for the sake of the time. So finally is the case study, which is Project Aurum, which is the CBDC, retail CBDC prototype in Hong Kong. Well, it follows a two-tier architecture. There are two layers. One is the wholesale layer, which is used by those banks to do interbank settlement. And then there is a retail layer. Instead of using a blockchain, they have a set of validators, although they still follow the so-called UTXO models. Well, later you will see this is similar to a blockchain-based cryptocurrency, except that we don't have a blockchain. Rather, we have a bunch of validators, and they have a high-efficient database to store all these UTXOs. So this is the diagram. So we have the users. The users have their own private key, but they don't interact directly with the validators. Rather, they have to be onboarded by the commercial banks. So the commercial bank helps the user to orchestrate transactions and submit them to the validators when the user would like to make a transaction. However, the secret key is still under the full control of the user so that the bank will not be able to steal or spend the user's money. It follows the UTXO model, and the set of validators, as mentioned, is responsible for verifying all the transactions and maintain the set of UTXOs. So this is just a typical UTXO diagram. And for those who are comfortable with Bitcoin blockchain, you know, okay, even if we have, even if we use complete pseudonym, just use a Bitcoin address, there are a bunch of privacy issues, including the ID privacy, transaction privacy, and holding privacy. So here, because we use some kind of fixed address, so address equals to the private key of the user, so people will be able to track transactions. And then people can see, okay, the amount of each transaction, and also see, okay, who sent money to whom. So there are some privacy issues in the first version of Aurum. And so recently, we worked with HKMA and R3 to develop Aurum 2.0, which is to use the aforementioned technique, pseudonym and CKP, to improve the privacy. Now, there are two key techniques and 3 key features. The features is that the wallet address are now pseudonyms, and then we use CKP to protect the transaction amount, and encryption for compliance. So basically, the bank will be able to still decrypt the transaction and see who is the actual spender. And so you can support audit trail without mass data collection. Well, let me just skip a few slides because of the sake of time. So basically, this is the situation. Civil knowledge proof is used to prove that a transaction is correctly formed, but including the coin ID is encrypted correctly so that if the bank needs, they can decrypt this. And last But not least, actually, it's not so easy because we need to make sure the transaction is efficient enough. So we design our CKP system in such a way that the bank with the secret key can generate part of the proof and the remaining part is generated by the bank so that together they can generate this expensive CKP. And also we try to make this a one-pass protocol so that after generating the CKP, it is sent to the validator and to the receiver bank directly. We cannot afford to have interactions between the payer and the payee. So the take-home message is that we talk about CBDC, we discuss different PETs that can be used in CBDC and also Project Aurum, and we believe it's crucial to have CBDC with PET included by design, and we should be transparent on the design so that people can inspect and gain confidence. So the report of this project will be published within the next few months for people to inspect our design to make sure this is error-free. So thank you so much for having me here today. And if you have any issue questions, feel free to email me. Thank you.